another episode of the Real Estate Vibe Show. I'm your host, Winky Lumba, and today I have a very special guest with me, Dan Handford. Dan Handford is one of the managing partners with a national private equity investment company in Carolinas, the passiveinvesting.com. He has led the company to acquire 3,782 plus units with a portfolio over $1 billion, billion with a B. He's also an active accredited investor himself in over 60 real estate and angel investments throughout the US. Welcome, Dan. I'm super excited to have you with me today.
Awesome. Well, I'm glad to be here and looking forward to sharing with your audience here.
Thanks. So I'm going to start with my favorite question that I ask everybody. Tell me about yourself. How do you see yourself at the present moment, professionally as well as at the personal level?
Sure. There's a lot of people that kind of look and kind of see some of the success that I've had. And I look at it and a lot of times think that I haven't really, not that I haven't had more success, but I feel like where I am today, that there's still a lot more that I have been put on this earth to achieve. And so I at this point, we could, stop working and not do anything else, but I don't feel like that's why I was put here. And so I kind of see myself as kind of still on the ladder, if you will, or on the on a journey to try to get to where I want to be able to go, from both a personal and a business side. I kind of see it on both sides. From a personal perspective, I'm married and have 4 children, 11, 10, 5, and 4, 3 girls and a boy. So we have a lot of different things happening there. And same thing, a lot of people see some of the success we have in business, and I've had people point out that, maybe you're not spending enough time with your family or something like that. And, we really, my wife and I have always done had a really good process involved to be able to make sure that we can continue to keep our family in the forefront and involve them in a lot of the different things that we're doing. And I feel like that's kind of how I see myself. That there's definitely, opportunities to grow and to improve and things like that. But I feel like we do a good job being able to, take care of our families as well as all the different things that we're doing from a real estate perspective.
Great. And you said this is not it. There's much more to it. And what is the end goal that you have in mind?
So, I mean, it's kind of not a finite number. I mean, in the beginning, when we first started the group PassiveInvesting.com, our goal was to get to $1 billion in assets under management. And we had a goal to do that in 5 years. And we ended up doing it in about just over 3 years. So we did it a little bit earlier than our original plan, which is great. And so obviously our next goal that's been set out for us is to get to at least 2 billion, which our goal this year is to be in the $2 billion acquisition range, to be able to acquire right at $1 billion in assets just this year alone. And so we're on that trajectory and that path to get there. But from an overall perspective, our kind of overall end goal is to grow our wealth as well as our investors' wealth for many, many generations to impact the future generations in perpetuity.
You said you achieve your goal before the timeline that you guys have set for yourself. So what was the success factor in there? What was the secret sauce that you reached your goal way earlier than you were expecting?
Yeah, so I think there's a couple of different factors that were at play. One very important factor I think was very crucial was our tripart ownership structure that we have with the 3 managing partners. There's some people have the philosophy and the mentality that they want to hold and maintain 100% of what they're trying to grow. And a lot of times that's to the detriment of growth and scalability because they're so selfish and wanting to hold on to their entire company. And so when we first got together as a group, we split everything a third. We have 3 managing partners. And a lot of people will go, well, I hear about too many partnerships that fail, right? And it's true. There are a lot of partnerships that fail. And it's one of those types of things that we are very cognizant of. And I've interviewed quite a few people that have had failed partnerships. As a matter of fact, I had a podcast called Tough Decisions for Entrepreneurs. And one of the number one things that we heard on that podcast, because my wife and I did that together for a couple of years, the number one thing we heard about it was failed partnerships. And the failed partnerships were primarily due to people that got into business with each other who did not have complementary skill sets. They both liked to do the same thing. And so when they wanted to do something a different way, they would always butt heads, right? You know, a lot of times we think partnerships fail because of finances. And yes, that can be one aspect of it, but the primary underlying root cause is that the partners don't have complementary skill sets. And so for our group at passiveinvesting.com, we have 3 managing partners. My focus is primarily on investor relations, investor management, marketing, and then the overall strategic objectives and kind of pushing the company forward into different areas. And then Brandon Abbott's role in the company is primarily for acquisitions, dispositions, and capital expenditures, working closely with the property management companies to come up with those CapEx budgets and analyzing those very closely. And so Danny's primary role is on the finance side. So he actually used to work for a large national consulting firm, international consulting firm, was one of their top financial analysts there, and one of their top financial consultants. And so what he does for us is he does all of our financial due diligence and underwriting and works with the attorneys and the lenders. And so we each have our own separate lanes. And Danny also heads up our asset management team too. But each one of we have different roles and responsibilities across the different verticals that we are over. And there is overlap in the different positions, but we don't necessarily try to step on the other person's lane, if you will. And if we do, sometimes we have to say, hey, you know what? Hey, Brandon, you need to get in your lane, right? Stay in your lane. And not that each one of us don't mind feedback. We're fine with feedback, but at the end of the day, each one of us as the managing partners have the responsibility to make the right decision for what we are in charge of. And we trust our other partners that are involved to be able to make those decisions and then back them based on the decisions that they have made. And so, you know, again, going back to your question of what do I think was the secret sauce, I think that right there of having partners that are diversified across multiple skill sets and having complementary skill sets has really helped us out. And then I would have to lean on our team. I mean, we have the very beginning, it was just the 3 of us, our 3 managing partners, and we've just continued to grow over time as we acquire more properties. And we have a really, really solid team right now. We have I think we have right at 35, 36 full-time team members that work directly with passiveinvesting.com that really kind of make us look good, if you will. So.
Yeah, you said it very well, you know, because if you have the team with the complementary skill sets and also a common goal, a common vision together and working together to achieve that, and the glue is the trust. And it seems like you guys trust each other, staying off of each other's lane, and at the same time getting the feedback, which is really important. And that's how the team grows. From here onwards, I would like to know, you said the goal is $2 billion this year. So what is your efforts or what is your plan to achieve that this year as a team?
Yeah. So, you know, last year, our primary holdings is in multifamily real estate. So we have a majority of our holdings is in multifamily. And then last year we launched a self-storage team with passiveinvesting.com. And so we acquired, I think, right about 85 million last year in self-storage. And then we announced that we were launching into the hotel space, the hospitality space. In the beginning of this year, we have our first hotel deal under contract right now. We have a team right now that's looking at those additional assets to acquire. And then we've also launched another division of our company that is looking at express car washes to acquire those. We have 2 that we've already acquired, 7 of them that are actually, we have more like 11 under contract, 7 of them that are, pending close right now in the next probably 4 to 6 weeks or so. But we have quite a few other ones that are in the pipeline. So to answer your question, we're focusing on multiple asset classes because depending on the different types of debt options that are available for each one of the assets, those capital market quotes and term sheets to determine how much we can pay for a property, and ultimately if we're going to get awarded a deal based on those terms that we're getting from a debt perspective. And so right now, with the volatility in the capital markets right now, it's been a little bit more challenging to find some multifamily and self-storage. So it's been great to be able to have some additional asset classes that we can continue to look at and review and underwrite to see if it fits the criteria that we know that we're looking for, as well as our investors.
Yeah, diversification is always good, and self-storage is a good space. I'm there too as well. But moving on to this car wash and the hotels, I mean, isn't that like a different ball game than the multifamily? Having the experience in multifamily, how would you transition? Or I mean, you already did. In what was the path like? Was it hard or easy, or you felt like, oh no, you can do it, even though the underwriting might be different too, the way you're looking at the numbers, right? And like you mentioned, the loan, the way you're getting the loan term sheets, that could be way different than the multifamily as well.
Yeah, I mean, it does have quite a few similarities, but there are some different nuances to each one of them. Obviously, with multifamily, we were dealing with 12-month leases for their tenants that are there. With self-storage, they're 30-day leases, and then with hotels, they're pretty much 1-day leases, right? With a hotel, because they're more short term. And then there's also with express car wash. I mean, it's more like a 5-minute lease, right? Because they're just going through the tunnel one time in the car wash. So there's definitely some similarities to it. I would say that one of the questions that we get from our investors is, hey, how do I know that you're going to continue to protect and watch over the investments that I have if you're quote unquote spreading yourself maybe a little bit too thin across these different assets? And one of the reasons that we named the company passiveinvesting.com and not multifamilyinvesting.com is we want to leave ourselves open to the opportunity to provide our investors with different investments across multiple asset classes. And so this has been the plan from the very beginning, to be able to set out to have multiple asset classes that we can go into to be able to provide some diversification for our own portfolio as well as our investors' portfolio. And for us, even with multifamily, it's basically like buying a business, right? Because you're buying a business that has people and has processes. You have to watch certain KPIs to make sure that you're hitting the numbers that you're going to be hitting. And if you're not, you got to know when to pivot and change. And for those who have never purchased multifamily, you wouldn't realize that, but it's really like buying a business that just so happens to have real estate associated with it. And so if you look at it from that perspective, there's really not much difference. I mean, yeah, there's going to be, you got chemical costs with express car washes, right? You don't have chemical costs and really high utilities when it comes to self-storage or something, right? But you still have basically a line item on the T12, if you will, that you got to review and analyze and look at the net operating income or the EBITDA or whatever metric you're looking at, and seeing what the market rate is for those types of assets. And so for us, it's really been our strength is being successful in running good quality businesses. And that can translate into multiple different asset classes, no matter, what type of, underlying business is there. So, as we move forward into the future, there's going to be some other alternative asset classes that we can go into, like medical office buildings or industrial or various things like that. That is, as long as you look at it from a business perspective and you have the right knowledge base there, then you can be successful with that as well.
So how does your investor pool respond to this multiple asset classes that you're working with? Are they like, separate? There's a separation, like this is the multifamily investors only, or these are the self-storage, or these are the people I wanted to go to for the hotel investments only? How does that work? Or is it like a mix kind of thing?
Yeah, it was actually our investors that really pushed us to, launch into some additional asset classes sooner than we had thought, because they wanted some diversification. And if they're not going to get the diversification with us, then they're going to go somewhere else and find it somewhere else, right? So we decided to provide it to them. And it wasn't, when we launch a new asset class, it's not just all of a sudden we find a deal or we release it and that's when they first hear about it. We do a lot of education to our investors as well. So we actually have a physical printed newsletter. Actually, one's right over here. This was one that got returned from from an investor. I just pulled it out of the mailbox. And so this is a kind of like a magazine style, high quality, It's usually about 16 pages worth of content that each one of our managing partners writes an article in that newsletter, and it gets published and sent out via snail mail, US mail, to all of our investors. And so that we can make sure that they get access to this. And then, of course, some of the articles in there, we'll repurpose them and put them into our blog or send them over to our email newsletter and stuff like that. But we do a lot of things to educate them ahead of time. And so before we even release a deal, we're educating them in here as to the reasons why we're moving into that and why they should as well. And so we've been able to fill up very quickly on some of the newer asset classes that we put together because there's so much interest from our investors to want to move into a different asset class to provide that diversification.
Yeah, I really like that actually, that idea, having the paper copy and send it via snail mail, because some of the people, they really like that, having kind of touch and feel kind of thing, and then read it like old fashioned way. And some of the old money comes that way faster as well, right? I mean, the newer money is all like internet based and all online. But old money, it works with the old fashioned way much better. What do you think about that?
No, I totally agree with it. And that's one of the reasons why we do it. And, our goal is to try to reach as many. You talked about, the sense of touch. We try to reach as many of those different senses at the same time as possible, right? Which is why we have literally like high quality physical printed newsletter, right? So it's the touch. It's also the site. We've sent things in them before that have a smell to them, so you have all those different types of, senses that you can try to do it. Inside of it, you can see inside this newsletter, we actually take the front cover of the newsletter and we actually make it into a coloring sheet. So they can now involve their family into it as well. So they can have their kids or their grandkids have something to color with. And then, of course, the grandkids will stick this or whatever on the refrigerator, so everybody gets to see it when they're coming in, and has our information on it and stuff like that. So it creates a talking point to the investors. And then in the back of this thing, we also have a word search down there. So we kind of, again, provide some additional fun stuff for them to do. And, we've had investors that have told us, don't ever get rid of that, because I look forward to my newsletter every month so I can finish the word puzzle in the back. So it's good to kind of involve them with different things other than just sending them an email. Plus, when we were just sending the email out of the newsletter, we'd get about a 51 to 52% open rate, which is really high for email marketing. But I also still looked at that and I was like, that's almost 50% of the people who aren't opening our emails. So what happens when I release a deal to the investors? They're not going to see it, right? At least 50% of them won't. So now we send them this on a monthly basis. And then you can see over here, this is another one. This is a deal we just released a couple of weeks ago. And this was another, this is basically our investor OM printed up and mailed physically to our investors so that they actually receive a copy of it. And we're pretty much 100% positive they're receiving it.
Oh, I love all those marketing techniques that you're using. And you're involving the kids as well, which is awesome, because that way you're staying in their mind all the time, And when kids are coloring, okay, passive investing, or you're doing the word search spray, this is kind of always just staying in their mind, which is super awesome. So share with me what other marketing techniques that you're using for your company.
Yeah. So one of the things that we try to do is we try to make sure that our investors feel like they have a relationship with us, because that's really what investor relations is, right? We don't want them to feel like they just have that they are just a number. And so, all of our offerings are at this point 506 Charlies, which means we are required to only accept accredited investors. And so in order to be able to, and so right now, we don't have to have phone calls with all of our investors. As long as they're accredited, they can sign up. But one of the things that we still believe in is the relationship piece of investor relations. And so we have a higher likelihood of somebody investing with us if we can jump on a phone call with them and have a conversation with them and start to build that relationship with them. And so we have a process in the back end. When people go to our website, fill out the form, we make sure that we reach out to them to try to get them on a phone call with one of our investor relations team members that's local to their area, or at least their region, so that they can be connected with somebody that's working with our company directly, that could potentially meet with them in person, or meet up at a local event, or be able to create that deeper relationship with our investors. And so we have an investor relations person that's kind of stationed on the West Coast, in California. We have one that's stationed in Texas and in the Dallas-Fort Worth area. And then we have one stationed on the East Coast as well, to kind of have a coverage across the entire United States in multiple time zones as well.
Oh, that's pretty awesome. I really like that too, actually, getting on the phone 101, give them the confidence level, some trust, because there gotta be some trust, Like one of my good friends, he told me one time, said people will trust others, even your friends and family with the kids, but not with the money.
Mm-hmm.
So when it comes to money, it gets really tricky. So it's always a good idea to pick up the phone, build that relationship before you even ask them to invest. And I tell everybody, I'm not even in a investing game or investing business. I'm in a more relationship business, because I'm building relationship. I'm meeting with people to build long-lasting relations, and that's what life is all about too, right?
Yep.
Connecting with each
Absolutely.
other, helping each other grow. And that's the purpose of life, because no matter how big you grow, at one point, you're gonna still think, okay, it's not enough. Let me go ahead and scale more.
Mm-hmm.
So it's a good idea to reach out to investors that way, and then just make strong connections with them. I like those marketing techniques, but I wanted to step back a little bit. I'm gonna ask you, how did you start in real estate? I thought you had some medical background before, or if
Yeah.
I'm
Yeah.
wrong.
So I'm a chiropractor by trade. And when I was working as a chiropractor for myself, so I've never actually worked for somebody else as a chiropractor. I just started and opened my clinic right out of when I graduated, right when I got my doctorate, for my education. And so for the first couple of years working for myself, I realized that I was really kind of stuck on a job, right? Because I was capping my income, because I could only see so many patients an hour. And if I wanted to go on vacation for a week, I still had to pay my staff. So it cost me more money to go on vacation than it would for me just to stay home. And so I never wanted to go on vacation. So it was kind of I enjoyed the patient care, but I didn't enjoy the time it took, I guess, right? Because it was taking a lot away from the family, as well as taking a lot of time to work, and not really seeing the high fruits of the labor, if you will. So I quickly learned to hire on other people, and so I learned to. I hired a chiropractic associate at the time to help me with that space. And then a few years later, ended up hiring a medical doctor and doing some integrated medicine between chiropractic and medical, and the medical field. And then really fell in love with the medical side of the stuff that we were doing. And I didn't have to do it because I didn't have the qualifications for it. So I was able to hire on some good quality people to do that. We grew from 1 location to 4 locations. My wife and I still own those clinics today, 100%. They're 100% debt free, and they cash flow very well. And so that's a good thing, but it also creates a tax problem, because we're making a lot of money and we have to write a lot of money to the government in taxes. And so instead of writing large 6-figure checks to the government once a quarter, we decided to look into the real estate space to try to offset some of those taxes from depreciation. And so being able to invest in real estate was that ticket. But for me, I had already achieved a lot with the medical clinics at that point, and I really didn't want to start small. I didn't have any desire to go, start doing single family or smaller multis or anything like that. So started doing some passive investing myself first, as an LP in various private syndications. And then hired a mentor and started doing it on our own. We actually did a few deals where we co-GP'd with other people first. And then very quickly, I think it was like our 4th deal, we ended up doing on our own. And then ever since then, we've been doing deals on our own since then. And in 2018, we started and raised about $4 million from our investors. 2019, we raised 32 million. 2020, we were at 61 million. And then last year we raised just over 196 million. And this year we are already at about 125 million that we've already raised for this year.
That's only 1 quarter. Oh, we're in the second quarter only. So I'm going to ask you this question. I would really, really like to know, going from 4 million to 32 million, then 60, 196, and then in quarter and a half, 125 million. How did you achieve that?
Well, I think a lot of it goes back to what we were talking about earlier, right? We talked about it's all a lot of it is really all about relationship building, right? So I've been very good about being able to build relationships with various people that has allowed us to be able to raise the amount of capital that we have. But I would also say it has to do with our repeat investors. So we have about 70, each deal we put together, about 71 to 72% of those investors are investors that have already invested in another deal with us. So we have a very high repeat investor rate in each deal, which allows us to be able to have the confidence to be able to take down larger deals and to be able to acquire more and more assets. And so for us, that's what has been, a true kind of notch, if you will, on the belt, is that I guess we're doing something right when we have such a high repeat investor rate. And one of the things that we do, Vinky, is we also do local dinner events across the country for our investors, where we only really want about maybe 10 to 12 investors at each dinner, but it allows us to be able to get them in the room with us and put a face to the name, shake their hands, and actually deepen that relationship even further. And one of the things that we do during those dinner events is we go around the room and we ask the investors to share with us why they decided to invest with us to begin with. And if they've invested in multiple projects, what was the one thing that caused them to say, I'm going to invest again? Like, why did you decide to do it again with us, right? Because it's one thing to put money into one deal, but it's another thing to continue to put more and more money into multiple projects with us. And we didn't realize it at the time, but when we started doing these, we started getting that feedback from investors. And one of the things that we found is that we do a really, really good job on communicating. And the word and people, when you think about the word communication, it is probably the number one reason why most relationships fail. Whether it be family relationships, siblings, mom, dad, parents, whatever, spouse, it can, and of course, it bleeds over into just about every aspect of our lives, right? So whether it be friends or family, colleagues, whatever, having a poor communication can cause you to have a lot of wedges built into relationships that can cause a lot of issues. And so for us, we focus a lot on the communication, but we almost do it as like it's something you should always do. Like, right? It shouldn't be like, to us, we didn't think it was something special. So we were just doing what we what we think is expected of us, right? I mean, this is what you should do. And we heard from from our investors that there are other operators that they don't want to invest in again because of their communication. It just is terrible. They get them into a deal and then they never hear from them again. They won't answer their phone, or they won't respond to emails, or it takes them a week to respond. And it can be very frustrating as an investor. And my wife and I are passive investors in a lot of different projects ourselves. We have, I think, like 65, 67, somewhere around there, different passive investments with about 17 different operators. And there are certain operators that we feel the same pain, of like, they're not communicating to us very well. And it's just, I kind of don't mind those operators from my perspective as another operator, because I call those operators donor operators, because they're basically donating their investors to us. Right. So the more we have of that, great. I'll take their investors and we'll continue to show them how investors really should be treated and handled. Whether we have good news or bad news, there's got to be a level of communication involved there. And that's what we're really good and strong at.
Yeah, I think communication is the secret to success, I would say, because communication is the basis of everything. Mm-hmm. So you got to know, how much you should be sharing or how much you should not be sharing. But my thing is I should be sharing more than what they're asking for, because a lot of questions are answered for them then. And there is a comfort level. Plus, I just feel like all my investors, they should be on the speed dial. And my investors, they call me like, in the middle of the night too, whenever they have a question. They're not going to wait till next morning. And I tell them that too, that once you start investing with me, we are kind of married for 3 to 5 years. As long as we have the investment, we are together on this, and feel free to call me anytime. And I think that works really well. And I would say, communication is the best thing, because most of the time people hold themselves back and they're scared to ask questions, or they are scared to even answer because they feel like, oh my God, I'm not sure I'm right or I'm wrong. And the questions people don't ask because they're hesitant. They think, oh, it might be a stupid question. But in my dictionary, I don't think there's any stupid question, Like you said, donor operators. It's not like that they're bad operators. They're very, very good operators. The only problem is, number one, is they might not have the time for the communication, and they do not have the team set up like you, that they have somebody, dedicated people for the investor relations. That could be the other issue too, but which is working in your favor anyways, right?
Yeah.
So donor operators, there's nothing wrong,
Yeah, no, like I said, I'm more than happy to have those people out there because it definitely makes us look good.
Yes,
So, I mean, it's one of those things where like those investors that said that to us, I always ask them like, well, did you lose money? And they're like, no, I didn't lose money. I was just so frustrated with the level of communication that I'll never invest them again. Because, it's not that they lost money. They might not have made as much as they had originally projected, but they still made a decent amount of money. It's just the lack of communication was really the frustrating point, that when you waste somebody's time by not communicating very well, it's very, very frustrating. Because I have somebody right now that one of our bankers that is like that right now. He's very slow to respond. And, I've already, we've had some internal conversations about not necessarily switching banks, but like trying to find somebody in the bank that's different that we can work with, because this person is so terrible about, responding to text messages or emails or phone calls or anything. And we spend more time chasing this person down for answers on stuff because they don't respond and communicate very well. And that is very, very frustrating. And then from an investor's perspective, it could be a very frustrating as well if they're having to chase things down and spend way too much time doing this. And then it causes them not to want to invest again because they don't have the time to sit here and chase something down.
That's true. The one thing is time is money for them. And the second thing is, they're trusting you with their money. And then when the money is involved, they want you to kind of keep track of that. And then if you're not communicating or not giving them the answers that they're looking for, it's important for them because it's just like how you make them feel. If you make them feel comfortable, make them feel welcomed all the time, no matter when they call or what kind of questions they have, you're trying to answer that, they're going to be investing with you over and over again, like it's happening in your scenario, which is awesome. So I think I can keep on talking to you for another hour, but we're out of time. I'm going to ask you one golden nugget for my audience. It's not like you didn't give me enough, but I'm just hungry. Another one.
Sure. I would say, especially in these types of assets, you have to always keep in mind the phrase, if you can't measure it, you can't manage it.
Good one. If you can measure it, you cannot manage it. So correct. Measure and manage. Awesome.
Yes. You got to make sure you set those KPIs, those key performance indicators for your team, and keep them accountable to that to make sure that you have the ability to measure what matters. That's another thing too, is you can measure a lot of things, but you also have to make sure you're measuring what matters. And that way you can actually manage it properly, whether you need to pivot one way or the other.
That's true. You said it very well. It has to be aligned with your vision, As long as you can envision it or you have a bigger vision, you are able to achieve it. If something beyond that, it's not going to work. So this brings us to our rapid fire round. I'm going to ask you 5 questions. You're going to answer it in 1 word or 1 sentence only. So are you ready?
I'll do my best.
All right. So who was the most influential person in your life?
I would say, like, I'm a big marketing person, so I would say Dan Kennedy.
So let me ask you a marketing question then. What is the best book that you have read or recommend?
So there's a book by the name of, it was written by a gentleman by the name of Robert Cialdini. It's called Influence, The Art of Persuasion. And it is by far my all-time favorite marketing book. It's actually about, the topic is around social psychology and how you can get people to react. And so there's a lot of good principles in that book. And it's one of my number 1 top, marketing / business books of all time.
So I'm going to ask you a follow-up question on that, on the marketing. So tell me one good marketing skill that you learned from your book and that you're, keep on using over and over again.
Sure. So in that book, he has like different rules that he goes by. And one of the rules in that book is actually the rule of reciprocity. And the way that actually plays out and what we do right now is, we have a free kind of educational platform called the Multifamily Investor Nation. We also have one for storage called Storage Investor Nation. But our goal there is not to sell coaching programs or anything like that. Our goal is to just provide a lot of high quality education to not our investors, but to potential investors. And so we're providing a lot of value over and over and over and over and over and not charging for it. And in return, we get that back, right? And that's that rule of reciprocity. You give a lot, you get a lot, right? And so we're providing a lot of value at no charge to people. And so, most of the people that we educate are not ending up turning into our investors, but we do get quite a few investors from that free education that we do. But what the byproduct of what we do is also other people that we're teaching and we're learning that are learning from us. They now have a good outlook or a good thought about us and our groups. When people reach out to them and say, hey, what do you think about this group, passiveinvesting.com? They have a good, positive mindset around who we are and what we're trying to accomplish because we've taught them, and they are where they are today because of some of the things that we've taught them.
Great. I love it. You said it, whatever you give out, you get it back, maybe multifold, right?
Mm-hmm.
So follow-up question on that. In one word, tell me, what does life mean to you?
What does life mean to me? Well, I mean, I'm a Christian, so I'm a Bible believing Christian and a born again Christian. And I think that we are put on this earth to be able to further his kingdom. And so a lot of the things that we do are put into place because of having a kingdom purpose, right? And so for us, life on this earth is very temporal, and we're going to be in a different place, in the future. And so, for me, living every day to its fullest and being able to have an impact for the cause of Christ is kind of the of what life means to me, if you will.
Yeah. So tell me one favorite thing of you. What is your favorite thing? Any, whether it's a sport, game, food.
I'm a big marketing and business person. So I enjoy sitting down, just having a good, fun conversation around different types of businesses. I like to be able to help businesses kind of think about different ways to market themselves and improve their operations. And so for me, that's something I like to do. I mean, my wife and I also play golf together. So there's things like that we like to do for fun. And I haven't been able to play racquetball for a little while, but I really enjoy racquetball. It's one of my all-time favorite sports there. But for me, I mean, I really, truly enjoy the business and the marketing aspects of what we do and just business in general.
Oh, how can people reach out to you?
So you can actually follow me more if you just want to go to go to linkwithdan.com, and that linkwithdan.com will bring you straight over to my LinkedIn profile. So you can connect with me there on LinkedIn. And then you can also go to our website, passiveinvesting.com, find out more information about us as well as our team, and potentially join us on some of our future acquisitions.
Thank you, Dan. I really enjoyed our conversation today.
Awesome. Thank you for having me. I appreciate it.